Name is Mike Sullivan. I'm a former IRS agent. I was a teaching instructor for IRS. I actually taught the offer and compromise program. I accepted offers, denied offers. Well, welcome to my YouTube channel. My YouTubes are short, sweet, and to the point. Knowing offers and compromise the way I do, I want to talk today about how to settle for less. What's really the key? The offer and compromise is a really unique beast at IRS. Last year, IRS accepted, I don't know, about 21,000 offers in compromise, and I think about 78,000 were filed. And I'm asked that question: how do I settle for less? How do I settle for less? Even my M&M man goes ahead and says, "How do I settle for less?" The key is the key is you've got to know the formula that IRS uses. You must know the formula. So many people don't understand the formula. Okay, first of all, you want to file the offer when you're doing the worst in income. IRS is only going to look at two things. They're going to look at your assets and they're going to look at your income versus your living expenses. Those are the two things that IRS is going to concentrate their time. IRS is not going to accept any less than the value of your assets. So if you have $100,000 worth of assets, IRS isn't going to settle for any less than that because they're going to have a lien and they can seize them. They're not, but they can. That's their philosophy. Your homestead is discounted 20%. So if you have a home and all your values are worth 100,000, but we can discount a home 20%, then 80,000 is your base offer. The next thing they're going to do is they're going to look at your income and they're going to look at your necessary living expenses according to IRS's national standard. Most people don't know what IRS national standard is. If you look at the 433A form, you're going to find out there is a column that specifically says for IRS use only. IRS has a series of standards for food and clothing, for housing and utilities, for car payment and operation of car. You must fall in those standards. If you're over the standards, it's going to hurt you. Whatever you have left over at the end of the month on your financial statement, according to IRS's standards, they're going to multiply that by the number of months you have left on your statute. That's how they come up with the offer and compromise formula. It's very simple. Your assets times whatever you have left over at the end of the month by the number of months you'll have left on the statute. That is the magic formula. And there's tricks within tricks that I'm not going to go over to tell you because only I know the tricks because I put in 10 years at IRS and I know the tricks. But at the end of the day, just remember IRS is going to look at that financial statement. How they look at it and how you look at it are two different things. So remember, submit your offer and compromise when you're doing the worst. If you got $10,000 in the bank and you want to give that to IRS, 10,000, IRS is considering that already a part of the offer and compromise. So if you have a small case, do it yourself. If it's a larger case and you don't know what you're doing, don't waste your time with it. Give it to a pro, okay? Anyway, have a good one. Hope I helped.